Forex traders. Welcome back to Forex Scope, your go-to channel for insightful Forex analysis, precise buy sell signals, and future price trend predictions. Today, we're diving deep into EURJPY, examining both the 15-minute and 1-minute timeframes to uncover the latest opportunities. Before we get into the nitty-gritty, if you're serious about leveling up your trading game, make sure you hit that subscribe button and turn on notifications. You won't want to miss out on these analyses. Now, let's get started with our EURJPY breakdown. This support zone is identified by a significant period of consolidation where this resistance zone is characterized by a strong rejection of higher prices, evident from the sharp drop in price after reaching a high of 179.849. The upper boundary of this zone is clearly defined by the high of 179.849 from the candle between 1645 and 1700 hours, and the lower boundary is at 179.716 from the low of the candle between 1700 hours and 1715. We see a significant bearish candle from 1645 to 1700 hours with a high of 179.849 and a low of 179.767, followed by another candle between 1700 hours and 1715 with a high of 179.854 and a low of 179.756. This indicates a strong area of selling pressure where sellers entered the market aggressively, pushing the price down. The presence of long upper shadows on these candles signifies that any attempts to push the price higher were met with immediate selling. This zone represents a barrier where the demand that drove the price up previously has now been overwhelmed by supply. The multiple touches and the clear rejection of price above this level make it a significant resistance area. The support zone is identified between 179.714. The Euro-Japanese yen is currently trading at 179.716, near the lower boundary of the 1-minute resistance zone. Analysis of the provided 1-minute chart data reveals a pattern of oscillatory movement, suggesting potential for a short-term bounce followed by a continuation of the prevailing sentiment. The price has recently tested the 179.789 resistance level, which aligns with previous price action and the upper Bollinger Band, indicating potential for sellers to re-enter the market. However, the proximity to the 1-minute support at 179.670, coupled with the overall upward bias from the Fibonacci levels, 179.670 less than 179.789, suggests that any downward movement might be met with buying interest. We anticipate a potential upward push towards the 179.745 level, driven by short covering or renewed buying. Following this, a retracement is likely as sellers reassert control near the upper Bollinger Band, potentially pushing the price back towards the 179.710 support. Further upward movement is expected, targeting the 179.768 mark, as buyers attempt to breach the immediate resistance. A subsequent consolidation or minor pullback to 179.730 could occur before a final push towards the key resistance at 179.789 is attempted. This prediction is based on the observed price action, the interplay of support and resistance zones, and the current positioning relative to the Bollinger Bands and Fibonacci retracement levels. The overall sentiment, while showing signs of resistance, is still supported by underlying buying pressure observed at lower levels.